Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this week's free educational presentation, where today I want to talk to you about my 50-year trading strategy. This is an actual strategy that I trade and use every day, and I've actually been using almost on a daily basis for the past 5 decades. I was first taught this method almost 50 years ago on the trading floor of the stock exchange, and today I want to share with you the first two rules of this particular method. Let me share with you just a really quick example of how powerful this method is. Let's look at this older chart of NVIDIA, okay? Someone looking at this would say, well, obviously we're in an uptrend, but then all of a sudden this happens, and you say, well, now it looks as if the trend has changed. So now it appears that we shouldn't be in this stock, or maybe we should be waiting for it to resume its upward trend. And so a lot of students at this point really don't know what to do. But what I will tell you with the first rule I'll be teaching you is that it would have shared with you that the overall trend is actually still up. And at the same time, you would have known that the short-term trend is still up. So when you combine these two together, these first two rules with the remaining rules, you would have actually generated a buy signal using this particular method. And then you could have eventually and potentially captured over 100 points in the following months. So this is what we're going to be talking about today, my 50-year trading strategy. Once again, it's a strategy I was taught some 5 decades ago and that I still use on a daily basis. And everything you're seeing today is displayed coming from the platform I developed with proprietary strategies. This is the PTS Primo charting platform I developed, and that actually auto-identifies these strategy signals. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 49 years. Starting next year, it will be 50 years. I can't believe it. I started my career on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, a specialist, if you're not familiar with what a specialist is, it doesn't mean you're any more special than anyone else. But in the old days, if you wanted to actually buy or sell a stock before the advent of electronic trading, the floor broker would take your order over the phone, and then he would walk up to the trader who specialized in making a market in that particular stock, like say IBM, which was one of the stocks I made a market in for a while. So I would buy or sell particular stocks in order to keep a fair and orderly market. And I did this through the crash of '87 and the bull market that followed. I left the floor in the mid-90s to manage money, also to trade my own account. And 15 years ago, I started teaching traders how to trade, because there's one thing I've learned in nearly 5 decades is that the main reason why most traders fail, it's not because they don't have enough education or a big enough size account, or they don't follow the right market or the time frame. It's really that most traders take themselves out of the game. What most traders do, myself included, when I first started trading, is you'll follow religiously either some indicator, some strategy or system, or some trading group, and just take all of your signals from that person, place, or thing. And you won't actually be a part of the process. Now, this is what the entire industry is based upon. And think of it. If this works so well, if this concept of trading works so well by blindly following someone or something, spit out the signals for it, then why is it estimated that 80 to 85% of all traders fail? Well, it's obvious that that doesn't work. And the missing link is that traders take themselves out of the game. They're not part of the process. They're not making their decisions themselves. So that's why I formalized specialist trading. I take all of the things I've accumulated in nearly 5 decades, things with high levels of trading consistency, and then provide them to my students around the world so that they can ultimately make their own trading decisions. You see, if there's one thing I've learned in nearly 5 decades, it's that the only traders that are still around, they didn't just have a couple of good trades or maybe a couple of good months or maybe even a couple of good years, but these traders have decades of experience behind them because they're making their own trading decisions. So that's our goal. That's the service we provide. We provide you with high probability concepts, tips, techniques, and tools so that you can make your own trading decisions. And we work with you so that you'll be in charge of your own trading for the very first time. That's our goal at Specialist Trading. And that's why we say we are first and foremost an educational company. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results by explaining and sharing with you these first two rules of this strategy. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are, as I just stated, first and foremost, an educational company, all examples are strictly for educational purposes only. Now we have a good-sized crowd here. I can see some of the names on the list of people that have signed up to watch us today. A lot of new names as well. So if you haven't done so already, if you'd like to get more information and education on a daily basis, please feel free to follow us two different ways, either on X, you see our handle right there at SPCLSTTRADG, or by subscribing to us on YouTube. We are also streaming this live on YouTube as well. Every day I post anywhere between 5 and 7 different snapshots of signals or setups that our strategies have generated on X. And also we are giving a lot of this content on YouTube as well. So if you'd like to see more of it, kindly hit the subscribe button and you'll get a lot more free education coming from you, either on a daily basis through X or weekly through our different webinars that we provide. Okay, with that stated, let's begin. And the strategy we're going to be talking about is strategy number 4. This is a method I was first taught years ago, decades ago, on the floor of the stock exchange, and I continue to use it to this day. So let me share with you some of the highlights of this particular method. It's a pattern recognition strategy, okay? So we're not concerned about fundamental news, earnings, interest rates, economic numbers coming out. It's based on a pattern that repeats itself over and over and over again in any market and in any time frame. Now, it's designed for traders looking to catch quick momentum. That's why I first started trading on the trading floor, because we were in and out of trades with strategy number 4 in a matter of minutes. But we've developed ways at Specialist Trading and Pro Trader Strategies to stay in the trade days, weeks, even months if you like. Now, because it's a pattern recognition method, it only uses one indicator. And I'm going to share with you exactly what that is in just a few seconds. Now, the advantages to trading with strategy number 4 is that it's extremely consistent. Now, I know a lot of you think that extremely consistent means that, wow, that's great. It must have a lot of winners. That's not exactly what consistent means. Consistency is an awareness that you will have losses from time to time. There's nothing wrong with losing as long as you have a consistent method that's able to recoup those losses. You see, that's what we're looking for. That's longevity. That's what will sustain you. Not some fly-by-night system that promises the world. And sure, maybe once in a while it has a great jackpot where it hits you buy at the bottom or sell at the top and you make tons of money. But it's been my experience that those systems or those strategies usually give it all back because they're more of a gambling mentality. What you want is a consistent method that has a 2 steps forward, 1 step back approach. So that's what we're looking for. If you have a loss every once in a while, that's okay, because you feel confident in knowing that oftentimes on the very next setup, you'll be able to make it back. Now, strategy number 4 makes you a part of the process. It's not a system where everyone enters at the exact same spot, everyone exits at the exact same spot, everyone places their stop at the exact same spot. We don't believe in that, because no two traders should ever trade alike. Remember, you have to make your own trading decisions. So if each individual is making their own trading decisions, they're all going to trade separately and differently, right? And that's the correct way to trade. But you have to be trading something and the components that are extremely consistent. So that's why it's okay to have a different entry than someone else or a different exit than someone else. So our methods are about 75% rule-based, and they allot 25% for this discretion, making you a part of the process. Lastly, strategy 4 advantages that it's extremely simple. Now, there are only 4 rules to this method. I'm going to share with you half of them today, and you're going to see just how simple they are. And you're not going to believe how powerful they are, because I'll show you a lot of examples of them in action. So please believe me when I tell you that most traders think that it's the more complicated things that make you a successful trader. But what I've learned is that it's the exact opposite. It's the simple things that make you a more successful trader. Make your trading simple and you'll get onto that road to consistency much quicker than you would if you're trading some convoluted indicator that you have no idea what it's based off. You have no idea why you're buying and selling. You're just blindly following someone or something else. Okay, so let me share with you the first 2 rules. Now, this presentation is being recorded. You're all going to be getting a link to this recording. So don't feel nervous or scared if you didn't copy down these rules. They're extremely simple, but even if you didn't get them down on a piece of paper or remember them, don't worry. You'll each be able to study them at your leisure when you receive the link to this video, okay? Okay, rule number one, buy or sell signals can only be entered if it's a buy signal above the 50-period moving average or if it's a sell signal below the 50-period moving average. Okay? This is what we call our buy-sell line, the 50-period moving average. This is going to tell us what the overall trend is, and we always want to be in sync with the overall trend. Now, most traders say, oh, well, Steve, I do that. I look at two different time frames, or I look at a ton of indicators that when they all line up, that tells me the trend. Remember, we're trying to keep things as simple as possible, and I don't know of another tool that is simpler than the 50-period moving average and is more powerful than the 50-period simple moving average. Now, as we look at this generic chart, all you have to do is plot the 50-period moving average and ask yourself, where is price in relation to that? Now, obviously, price is above, so that's telling you that the overall trend is up, and we're never going to be out of sync with the overall trend. That means we'll only look for buy signals. We will never look to go short when price is above the 50. Sure, we can sell to exit with a profit whenever we want to get out of the trade, but we'll never look to buy puts or to go short if price is above the 50. Why? Because the odds are not in your favor that that will work out. Sure, it will work out every once in a while, and you'll think, well, gosh, why didn't I just listen to that? That was a great sell signal. But remember, it's like the slot machines in Las Vegas. They are designed to give you a winner every once in a while. But if you sit there long enough, you're going to give all your money back because they're designed that way. Well, buying below the 50-period moving average and selling above is the exact same process. Sure, you may get a winner every once in a while buying below the 50-period moving average when the overall trend is down. But trust me, over time, you'll most likely give it all back. Take it from someone who knows firsthand experience. I did that my first year or two trading, and I couldn't make a dime because I was out of sync. So if price is above the 50, the overall trend is up. Conversely, if price is below the way we see here in this generic chart, then the overall trend is down and will only be a seller. Okay? Now, as we see here, this is a generic chart, but it doesn't make any difference. You can apply this to a 5-minute chart. You can apply it to a monthly chart. It makes absolutely no difference if it's crypto, if it's stocks, if it's futures. It works on all markets and all time frames. Remember, keep things simple. There's no reason to look at two different time frames to see if they're in sync with each other. In my opinion, that's really an urban myth. I've never found that concept to work for me. Usually, I sit and wait for them to line up, but by that time, I missed a really good trade. So we tell our students, listen, only trade the time frame that you're looking at. If you're looking at a 5-minute time frame, that's the only chart you should have on your screen, and plot the 50-period moving average there, okay? So that's rule number one. If you don't believe how powerful it is, go back and look at your last 10, 15 trades. I can almost guarantee you that the reason you lost money was because you were out of sync with this simple but powerful rule. You were buying, going long below the 50-period moving average, and you were selling or going short. I don't mean exiting, but you were selling to go short, betting for the market to go down if it was above the 50-period moving average. All right, that's rule number one. We now know what the overall trend is. I'm sure you're all looking at your stocks that you're interested in. You go, wow, this is amazing. This is too simple. Now we want to find out what the short-term trend is. So rule number two, we're only going to buy or sell, take buy or sell signals, but they must close in the top. If it's a buy signal, it must close in the top 25% of its range. If it's a sell signal, it must close in the bottom 25% of their range. Now that I've thoroughly confused all of you, let me share with you what that means here, okay? We have bars like this one closing in the top 25%. That's what we mean. In the top quarter, and you are above the 50, that's a sign that the stock wants to go higher. Now, sure, someone would say, yeah, Steve, it went higher for about 5 or 6 bars, but then it went lower, okay? Well, sure. How quick would you have had to been if you shorted it and got out on the next bar? Because look what we have here, another bar closing in the top 25% and now making new highs. Isn't it a lot simpler, a lot easier trying not to time these sell-offs, but just go with the flow when you close in the top 25%? Because when you are above the 50 and you close in the top 25%, you now have the short-term and the overall trend in sync. No reason, once again, to look at two different time frames. It's all right there on the chart in front of you. Same thing here. We are below the 50 period, so the overall trend is down. And we have a bar closing in the bottom 25% of its range, the bottom quarter. All right, that's telling you that the short-term trend is down and the overall trend is down. When you have that, you have powerful synergy for the market to continue. This is what we mean by being in sync with the overall and the short-term trend. Now, these are the first two rules of strategy number 4. You've just learned half of the rules of the method. I can't divulge the rest of the rules. It wouldn't be fair to our students around the world. We have students trading strategy 4 in over 115 countries and in every state in the United States. It wouldn't be fair to them if I gave you all the rules. But let me share with you some examples to show you how this works, and you can see these first two rules in action. And remember, everything you're seeing is being displayed using our platform, showing you how simple it is to auto-identify these strategy number 4 signals. Okay, so we're looking at a chart here, and this is in Google, all right? So it looks like we're in a downtrend, right? We're making lower highs. This is a classic downtrend, but are we really in a downtrend? First rule we want to do is click on strategy 4 on our platform, click on signal arrow, and we see that we actually have a buy right here. So what's this telling us is that it automatically pre-formats if it's above or below the 50-period moving average, and if the bar closes in the top or bottom 25%. So as you can see here, we did close in the top quarter of its range, and it must be above. It will not generate a buy signal if we were below the 50. So we suggest our students to plot the 50, but strategy 4 auto does it for you. And look what happened. The stock went up 48 points. Now remember, there were still 2 more rules that needed to be met, but once they were met, a strategy 4 signal was generated, and you could have taken advantage of that. Let's look at another setup here. This was an LIN. Most traders would say, well, Steve, this is a kind of a sideways market. I really shouldn't be doing anything. But is it really sideways? All we have to do is click on strategy 4, click on signal arrow, and it will auto-identify if a valid signal is in place. And yes, so it's automatically telling us that we are below the 50-period moving average, and we closed in the bottom 25% of its range, the first 2 rules, and the remaining 2 rules of the pattern were met. So this is a valid sell signal. So most people would say, well, I'm going to avoid this because we're just kind of going sideways, making a ledge here. You could have shorted it, bought puts, and in the next following weeks, you could have made 54 points to the downside. Or a lot of our students don't like to go short. They feel uncomfortable, but they use strategy number 4, a sell signal, to get out of a position. So if they happened to be long, they would have exited and saved themselves a 54-point loss. And another signal was generated on the very next bar if you happen to miss that one. All right, now here's a classic range market in CDNS, okay? This is where we've all been trained to stay away from markets like these because we go up, we go down, we go back up, and most likely we're going to go back down again. So you get whipsawed, you buy something, it goes down, you sell it, it goes right back up. But is it really a range market? Let's check out and see what strategy 4 said. It said, well, it may appear to be in a range, but strategy 4 is generating a buy signal right here. This means it's above the 50, and as you can see, we closed in the top 25% of its range. So even though it's headed up a little, it took a little while, but ultimately it kicked in. Look at the gap up opening it had here just days later, and the stock was up 54 points in just less than a couple of weeks. Remember, this is not based on any economic news. It's not based on earnings or interest rates or what announcement somebody said. It's all based on a pattern that repeats itself over and over and over again. Now, the reason why I like to follow this and not follow fundamental news, which is the way I used to trade when I first started, is because usually fundamental news, in my experience, is a day late and a dollar short. For example, here's where the news came out that something good was happening and the stock gapped up, so I would have had to buy it somewhere right up here once it opened based on that good news. But it's funny how the pattern back here was telling me in advance, a full week or so in advance, that it wanted to go higher. You see, my mentors taught me that the chart in front of you is the source. That's what you should be focusing on, not what some guy is saying on TV or what some economic indicator is coming out too late. The chart tells you just about everything you need to know. But for some reason, we are never told or taught as traders to focus on the chart. We're always taught to listen to what someone or something else is saying. Once you learn this pattern, you'll get onto that road to consistency much quicker. All right, so here we have a clear uptrend in ROP, okay? Higher highs, higher lows, right? Nope. Obviously, a sell signal is generated. That means we are below the 50, and you can see how we closed in the bottom 25% of the range. The two other remaining factors of strategy 4 were met. So this is a valid strategy number 4 signal. So where everyone else thought we're in an uptrend, this is why most traders fail, because they're saying to themselves, well, see, we're going higher. I don't understand. The market tells you what it wants to do in advance. Once again, we're just never trained to listen to the market. We're trained to listen to some guy in a chat room or somebody in a blog or some indicator, but listen to the market. And if you didn't want to sell or go short, you could have exited your position if you were long and saved yourself 50, or should be 70 points. Now look what happened the very next day after that sell signal. It gapped down, okay? Once again, the market tells you just about everything you need to know in advance. All right, here's an example in crowd CRWD. A buy signal was generated right at the bottom. The first two rules were met, and then it went up now 70 points. You could have potentially captured. MSTR, a sell signal was generated right here. We're below the 50, even though you don't see it. It's already auto-identified by the platform. And as you can see, we closed in the bottom 25% of this bar. A valid strategy 4 signal was generated, and the stock fell 75 points. Here's a buy signal. Now we're going to a different time frame. Here's a weekly signal, because nothing changes just because we change time frames. The same rules apply. Buy signal, we're above the 50. We close in the top 25% of the range. The remaining two rules are met. Stock shot up 112 points on a weekly time frame. Here's an example in charter CHTR. A sell signal was generated. The stock quickly fell 120 points. Wouldn't you have liked to have exited knowing that you had a sell signal on this day? Saved yourself 120 points. Here's the chart we started out with. This is a monthly chart in NVIDIA, okay? A monthly chart. So if you're a long-term investor, you can still use strategy 4. Looks like we're going up. We're in an uptrend, and then all of a sudden it changes course and goes down, right? Well, let's see what strategy 4 says. Most traders would say, I'm not sure what to do here. Should I exit my position? Should I go short? Click on strategy 4, click on signal arrow, and it will tell you if a valid strategy 4 signal has been generated. If one has not, you will not see the arrows. But if one has, you will see the arrows, such as here. So we must be above the 50-period moving average. It would not generate a buy signal unless it closed above the 50. It closed in the top 25% of its range, as you can see right here. And the remaining two rules were met. So we have a valid signal to go long, 102 points in the next 6 months, okay? See how powerful this is and how simple it is. Remember, we want to keep things as simple as possible. Now, we've just shared with you what strategy 4 can do with stocks. Let's look at some other markets and some other time frames, because we know not everyone just trades daily bars of stocks. Here's a chart in the euro yen, okay? Looks like we're in a downtrend, right? Making lower lows, lower highs. But a buy signal was generated right here. So this means we're above the 50. And this means the remaining rules were met. And it quickly shot up in the next 3 days, 450 pips. That's close to roughly $500 you potentially could have made. Let's look at another example here. This is the British pound. Are we in an uptrend? Nope, because we must be below the 50-period moving average. Remember, it may appear that we're in an uptrend, but this is actually not a buying opportunity. It's a selling opportunity, because we must be below the 50-period moving average. Therefore, a sell signal was generated. And we see here that this fell quickly 300 pips. Now, here's a chart, a 4-hour chart of spot gold, okay, XAU USD. As we see, it was going straight up as gold was really taking off these past few months here. How could we have taken advantage of this in hindsight? Well, click on strategy 4 and look at all the buy signals that were generated. You could have made potentially 1,000 points on. These were all strategy 4 buy signals on a 4-hour chart of gold. So it makes no difference what time frame, makes no difference which direction. Strategy 4 can help you become a consistent trader. Now do you see why I've been trading for now 50 years? Okay, let's recap what we shared with you today. Strategy 4 is a pattern recognition strategy. It's not based on news. It's not based on economic reports, or it's not based on what my perception of what I think the market's going to do. It's based on a pattern. This pattern, the same pattern repeats itself over and over again, as you just saw on any market, any time frame. Designed for traders looking to catch momentum. Now, remember, we initially started trading this years ago on the trading floor, and you get out every couple of minutes, but you can stay in weeks, days, months. It makes no difference. You can apply to all markets and to all time frames. I know I've gone to webinars before where I've seen these educators talk about, well, this is a great strategy. Look at the back-tested numbers. It hardly ever fails. We've only had 2 losers in the last 10 years. And then you find out that you have to use it on a specific time frame, and it only works on one market and one stock. Okay, so it's so specialized. It's like if you only have to trade that. But my definition of a good method or something that's consistent is one that's able to transfer onto any market, any time frame without changing the rules. You just keep the same rules. You'll be able to trade multiple markets. And strategy number 4 is able to transfer onto all markets and all time frames without changing anything. And the advantages are it's extremely consistent, as you just saw. Sure, there will be losses every once in a while. The other day, I was day trading, and my first trade of the day was a loss. But my second trade, I made that loss back, so I was breaking even. And then the third trade, I made money. So that's the way trading should be. It should be consistent. You're aware that you will have losses every once in a while. I mean, think of any athlete. Every time someone comes up to the plate, do they always hit a home run or get a single? No, they strike out every once in a while. But the great ones are the consistent athletes, the ones that miss a basket and then make the next one, and then 2 or 3 more, and then maybe miss one and then make more. Or the great entertainers that have maybe a flop movie or a flop album, and then the next one is even better or greater, and they come right back. That's what we're looking for in a strategy, okay? Now, this makes you a part of the process. There are different ways to enter. There are different ways to exit and different ways to place your stop, because we want you to trade what makes you feel comfortable. The basic pattern stays the same. That's the framework. That's the groundwork for initiating a setup. But how you enter, how you exit, how you place your stop is entirely up to you, and we work with you with that. Now, don't get confused. Remember, this is not complicated. They're extremely simple. As you saw, the first 2 rules, how simple they were, that's what trading should be. If you are trading and it's overcomplicated and you don't really fully understand the process, that's not a method you should be trading. It should be so simple that you can just, pretty much forget about it and leave it alone, because that's the way trading was meant to be. So ask yourself, after you saw these examples, do you think Strategy 4 can help your trading in 2026? Now, when I first started trading, everyone used to do this, and I'm sure all traders still do this. At the beginning of the year, as we are here in January, you make all these hopes and dreams and promises to yourself how you want the following preceding year to conclude. You want to have this extra money for maybe to go on that dream trip, or maybe you want to have some extra income just to help you out around with your expenses, or maybe you want to have that addition to your home. And you have all these hopes and dreams about how your trading can help you. And I would venture to say that the majority of all traders, myself included, when I first started out, never get to that point. In fact, usually sometime by February or March, you know that you're not going to get there, okay? I truly think strategy number 4 can help you with your goals and dreams in 2026. So because of that, we have a great discounted attendee offer for all of you today. Now, this is for a very limited time only. Strategy number 4, this is, now, when I first started trading strategy 4, as you see in the graphic here, it was for stocks only because most of the momentum was in stocks. But with added momentum in futures, in currency pairs, in crypto, and with just about all markets, that's how we say it's transferable onto anything. Because when we first started specialist trading about 15 years ago, we just focused mainly on stock. But now we focus on all markets, okay? You're going to get instant course access, detailed instruction. You'll get all the different entries, all the different exits, and all the different stops that you can choose from. Automatic buy and sell arrows. You'll get the complete course rules that you can apply to any market, any time frame. And you can use this on all the major platforms, okay? This is one of the best things about this as well. Okay, even though there are certain advantages to applying this with the PTS Primo charting platform, you still have some extra advantages with things that are not offered on the other platforms. Still, if you are used to using TradeStation or Metastock or a Ninja Trader, all the major platforms, you can still apply and use with our add-ons strategy number 4 on those platforms. So that's the great thing about this, okay? Now, we developed the PTS Primo charting platform to make it simple. So here's what we're going to do. Regardless of what platform you do use, We're also going to throw in an extra bonus of sharing with you strategy number 4, an extra bonus that is on the platform. For example, here was a sell signal in CDNS. Now, here's one of the best things that we have on the platform, auto-generated exit levels. As you can see here, all you would have to do is click on strategy 4, where we have signal arrow. Now click on range extension. And this is just one of the different exiting techniques that we have. And on the platform, you'll see 4 different levels. Now, if you're the type of trader that wants to get in and out quickly, you would use level 1 and 2. If you're more of a swing trader, you would exit at level 3. And if you want to get the most bang for your buck, you would place a limit to exit your short at level number 4. Okay, so let's see what happened to the stock. Let's say you went short and you want to exit right here. This is where you want to cover your short. Well, in a matter of days, it got right there for a 30-point gain. And then look what happened. It quickly changed and went all the way back up. This works to the upside as well. Here was a buy signal generated, a weekly chart of ACN. Click on strategy number 4. Before we had signal arrows, now click on range extension exits. And it automatically generates these 4 levels. These 4 levels change with each and every signal in each and every different market. They're not always going to be the same. So you can choose which one you want. Let's say you thought this was going to go all the way up to the 4th level. You place your exit right here. And in a matter of days, you could have potentially captured 37 points before it went right back down again, okay? This is a great, great bonus. You'll only find these extension level exits on the PTS Primo Charting platform. So here's what we're going to do. For a very limited time only, we're going to offer you strategy number 4. Now, the complete course, rules and manual for a $695 value, and the 6-month value of the platform. That's an $882 value. What we're going to do normally would cost you close to $1,600. We're going to discount that down to only $695. You're going to save roughly $900, a nearly 60% discount. But this is only good for the next 24 to 48 hours. You'd have to check with Pro Trader Strategies. They're my sister site, and they're in charge of all the discounts. Because I believe the real price of Strategy 4 sold separately without any deal is close to $5,000. And that's not including the platform. That's just strategy number 4. But here we're giving you the complete course, rules and manual, along with 6 months of the platform for only $695. It's a great, great offer. But remember, for only a couple of days tops. For more information, contact Pro Trader Strategies. I would highly recommend giving them a call right here at area code 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to answer any question you have about pricing or even taking your order over the phone. Now, that link you see at the very bottom right here is the link that will take you to the sign-up page and the info page. If you'd like to do that online, there's more info there. It's not a live link, though. You can just click that on. So what we've done is on the chat box, if you click on that little icon on the Zoom tray that says chat, click that on, and you'll see that there's a little link there that we've posted. And you can click on that link, and it will bring up a browser with all the info there, okay? Now, I will leave this information up here for you to copy if you want to copy down the number or give them a call or email them. If you have any questions concerning strategy number 4, what I went over today, or anything about pricing, now's the time to ask me. We have a few more minutes left. Simply go to either the chat box on the Zoom tray or the question and answer box, and I will answer them all to the best of my ability. I see we have one question here about exits. Is this the only exit method? Oh, no. We have upwards of 6 or 7 different exit methods. This is just one of them that is auto-displayed on our platform, okay? So that's one of the benefits of getting our platform. Now, if you do decide to even trade, let's say you have TradeStation, you can still plot strategy 4 on TradeStation and look, and you'll still get our platform for free, and you can open that up and look and see where these exit levels are and then place your orders. But it's just a great, great help, and there are just so many more things included on our platform that you won't find anywhere else. So it's great to have both. If you have Metastock, if you have NinjaTrader, all the major platforms, we will provide you with an add-on so that you can view strategy number 4 on the buy and sell arrows, okay? But no, this is not the only exit method we have. We have upwards of 6 or 7, and this is just one of them that's auto-displayed, okay? Steve, I'm new to trading. How much time and effort are required to learn this? Well, everyone's different. But if you're brand new to trading, by brand new, I mean where you've never traded before and you just don't even understand the concepts, I would think maybe a couple of weeks tops at the most, because this is extremely simple. But here's one thing, regardless if you've traded, maybe 30 years or 30 minutes, we always require, it's not a suggestion, we require that all of our students paper trade first, because there's so much more you can learn through paper trading. So even if you've been trading for a long time, I still paper trade. When I get a new idea or a new method that I'm researching, I paper trade it sometimes up to 6 months just to make sure it's valid and it will work in different market scenarios. So we're not saying you have to paper trade for that long, but we want everyone to paper trade, and just so they can fully understand the process and get it under your belt so you can, so you have no further questions, okay? Let me see. Does this strategy perform well in different market conditions? Yes, it does. One of the best things you'll find out about strategy number 4, along with a number of our other methods, is that because we use that 50 period moving average along with the bar that closes in the bottom or top 25% of their range, that will obviously keep you out of a lot of bad market environments. Because if the market is going sideways, most of the time that means you're jumping up and forth, up and back, above and below the 50 period moving average. So this will keep you out of trouble a lot of times. That 50 period moving average is a great, great tool. It doesn't cost you anything. You have it available right now. Most of you probably are looking at it already. And like I said earlier, go back and look at your last 10 or 15 trades. I can almost guarantee you that the reason you had losses was because you were selling short, betting for the market to go down when the setup was above the 50 period moving average, and you were buying to go long when price was below. So try that out and you'll see how it can keep you out of a lot of trouble as well, okay? Good questions. Any more that we have here in the last few moments? Now remember, if you're at all interested, there's absolutely no obligation, but please give Pro Trader Strategies a call. They're in charge of all the discounts and all the setups and all the tech support. I would call them at 310-598-6677. They'd be more than happy to give you a quote if you want to put together a payment plan, or they could take your order over the phone right now. They're very flexible, and they can answer any question going forward about the platform or what's offered or how to trade it, let's say on TradeStation or NinjaTrader or MetaStock with the add-ons, okay? And that link you see, once again, is posted in the chat box. So all you have to do is click that link in the chat box and you'll get more information, all right? Okay, if there are no further questions, I just want to say thank you so much for taking time out of your Wednesday and for attending today. I hope you learned something, but most especially, I hope you saw that our attention to really trying to educate you. That's really our goal. That's the only purpose we serve, is as an educational company. We want to educate you so that you can become a consistent trader. There are more than enough profits to go around on a daily basis. There's not a finite number every day or every week. There are more than enough. So why not share this with students? Why not share this with traders around the world so that everyone can become consistent? So as we close and take one last look at our disclaimer, I just want to say thanks once again for attending. I wish you all the best of luck, but most especially, I look forward to seeing you all in the Strategy Number 4 course and being students of mine with Strategy Number 4. Thank you so much. I'll see you next time. Bye-bye.